Alrighty guys, today we're going to go over the loan estimate. This is going to be in the first set of disclosures that you're going to get after you have a house under contract, and it's going to be the most important one that you're going to want to read. It's going to go over all the details of your loan, all the estimated closing costs, and anything associated to go with your loan. My name is Matthew McDonald from Premier Mortgage Lending. Let's start this up. Alright, so we're going to start with page 1 of the loan estimate. There's 3 total pages. Page 1 is just going to start with a lot of basic information about yourself and the loan. So as you see, we have the date issued on the loan, we have the applicants, as well as the property and the sales price. At the top, you're also going to see the loan term, the purpose of the loan, so whether you're purchasing or refinancing, that's going to be here as well. The product, right? So if you have a fixed rate, adjustable rate, whatever your loan product is going to be on here. The loan type, so conventional, FHA, VA, whatever your loan type is, as well as if you have locked the rate or not. Right? Section 2 is going to go over the loan terms. So the loan terms is going to be your loan amount, the interest rate, and the monthly principal and interest payment. Okay, this should all be negotiated with the loan officer before this point, so these numbers should really be no surprise to you. Okay, below this, you're going to see, is there any prepayment penalty and is there any balloon payment? Both should say no. If there is a yes to any of those, definitely consult your loan officer and figure out what the prepayment penalty is and why there's a balloon payment on that loan. Okay, right below it is going to be your projected payments. This is another very important section to look over. Okay, again, you're going to see that principal and interest payment that you'll see above. You're going to see your mortgage insurance, if that's applicable to you. Okay, so in this case, $82. And then you're going to see your estimated escrow. Okay, remember that escrow account is an account that you can choose to start up, which holds your taxes and homeowners insurance for either the year or the month. Okay, again, in this case, it's going to be about $206 a month. Below that, you're going to see the total estimated monthly payment. Okay, so you get to see that before you even enter into any of the loan. You get to see exactly what your payment's going to be with everything included: principal, interest, insurance, and escrow. Okay, right below that, your estimated taxes, insurance, and assessment. So what it means by assessment is if you live in a condo association, your HOA fees will be down here as well. Okay, again, in this case, it's $206 a month, and we have property taxes and homeowners insurance there. So it just kind of divvies it up so you can actually see how your escrow account is being being set up and what's going to be in that escrow account. Okay, and lastly, costs at closing. Okay, so this is again another really, really important number to look over. You're going to see your estimated closing costs, which we're going to go over fully in the next page of the loan estimate, as well as the estimated cash to close. These numbers are different. And I know they sound the same, but they are different numbers. Your closing cost is just that, the cost to close on the loan. The estimated cash to close will include your down payment, and then we take away any security deposit or earnest money deposit that you put down. So the numbers are going to be different. I would say the most important number to really look over is the estimated cash to close, because that's going to be the total number that you need from this point on to close on your loan. All right, next we're going to move on to page 2. Again, this page is going to really break down all your closing costs line by line. So we're going to start, section A is going to be your origination charges. This will differ lender to lender or broker to broker. Okay, but for the full gist of it, you'll see mainly 3 things. You'll see any amount of points that you paid for the loan, so whether that's to buy down your rate or to get a little bit of a credit with a higher interest rate. You'll see any application fee, and you'll see any underwriting fee. Okay, again, application fee should be 0 at Premier Mortgage Lending. We don't charge an application fee, but just be aware that if there is one, this is the section that it's going to be in. For section B, we have services you can't shop for. Okay, and what I mean by that is any appraisal fee, any credit report fee, flood determination fee, and then just any tax fees that go along with it. Okay, so I'm going to kind of break those down really quickly for you guys. The appraisal fee is the fee that you pay to have the house appraised. Now remember, an appraisal on the house is just an opinion of value on the property. So somebody goes out, they kind of check off what upgrades your house has, what your house maybe doesn't have, square footage, where it's located, and they take comparable properties and they give an opinion of value on that house. Okay, so that's all we're paying for that. For your credit report fee, that's just the fee that we charge to pull your credit and get your 3 credit scores. And then the other big one is the flood determination fee. Okay, that is a smaller fee, but all that is that we have to determine if your house is in a flood zone, and that way we can see if you need flood insurance or not. That's a smaller fee, but I get a lot of questions on that, on what that fee actually is. The next section is going to be services you can shop for. That's going to be section C on that page 2. Hey, believe it or not, there are services that you are allowed to shop for. This is mainly any title company or any attorney that you choose to go through for closing. Okay, the big things in this one is going to be your lender's title policy and your title search. Okay, what that is, and we'll start with the title search, is the title company or the attorney will actually do a search on the title to see if there's any liens or any outstanding judgments on the title. So that way, if you do buy the house and you don't end up getting title insurance, if there's liens on the property, you would actually owe money on it, and you would have to actually pay for that lien to get settled. Okay, damn it! This damn section.
This one's got a couple good bloopers.
I know. C, services you shop for. Next, we have services you can shop for, or section C of page 2. Okay, believe it or not, there are services you can shop for. Okay, a lot of this is going to be title or just the attorney that you're choosing to do your title search and for your title insurance. Okay, the 2 biggest things on here are going to be the lender's title policy or the lender's title insurance, which is right here, and then the title search. The title search is just a search done by the title company or the attorney to make sure that there's no liens on the property, meaning that there's no outstanding tax bills or anything like that that you would have to owe. We have to make sure that the title is completely clean before we can close on the property. Okay, the lender's title policy or the lender's title insurance is an insurance fee that the borrower does have to pay to protect the lender in that case. Okay, next we're going to come up into what's called other costs. Okay, and the first section of that is going to be taxes and other government fees. Okay, 2 big things here. Recording fee will be there, as well as transfer taxes. Now, transfer taxes only matters to those that are going to close in the state of New Hampshire. Okay, the state of New Hampshire has a $7.50 tax on every $1,000 of purchase price. Okay, so if you have $100,000, okay, you would owe $750 of transfer tax. That's kind of the biggest surprise for people, for borrowers that I see that close in New Hampshire. They don't know about that tax, and it can add up pretty quick, especially if you're talking about a $400,000 or $500,000 house. You're talking about $3,000 to $4,000 just in transfer taxes. So it is important to note. Massachusetts does not have that transfer tax. Next is the prepaids, which I just realized is a little bit covered by the 1,000, but you get the point here. The prepaids, 2 big things again is going to be your homeowner's insurance premium, as well as your prepaid interest. Okay, homeowners insurance premium, you are required to pay a year up front of homeowners insurance to make sure that the property is insured for the year. All lenders do require that. Okay, and prepaid interest is just any interest that you owe between the time of you closing the loan and when your first mortgage payment is due. So that differs person to person. If you close at the beginning of the month, you're going to owe more prepaid interest than if you close at the end of the month. Next, we have the initial escrow payment at closing. Okay, again, 2 big things: homeowners insurance and property taxes. This also differs state to state. Massachusetts collects property taxes and homeowners insurance every quarter. New Hampshire does it twice a year. So because of that, if you're in Mass, we collect 3 months generally up front. If you're in New Hampshire, we'll collect 6 months. So again, New Hampshire kind of gets hit a little bit harder there, which is why closing costs are generally a little bit higher in New Hampshire. Lastly is just the other section, so just any owner's title insurance. So the borrower's title insurance. This is completely optional to you. Okay. Now, with that being said, again, if there is any liens on the property and you don't have title insurance, you're responsible for paying to clear that lien up. Okay, so any attorney bills, and then just the cost of the lien in general. Okay, so it's highly recommended. Again, it is optional, but highly recommended there. After that, you'll just see the total of the other cost as well as your total closing cost below that. So you get to see all of this right up front. Okay, after that, again, we just have the calculating cash to close, so that number we talked about on page 1, that important number. You get to see how we find it. You have your total closing cost, you have your down payment, you then subtract your deposit, and then that's where you get that number. All right, then lastly, we have page 3. This is, I don't want to say not as important of a page, but the first 2 pages are definitely the ones that you're really going to want to look over. Okay, on page 3, you have a lot of the same information that you had on page 1, except this time you have the lender, all of your loan officer's information, as well as comparisons. So with this, you'll see what you've paid on principal, interest, mortgage insurance, and other loan costs in a total of 5 years. And then you actually get to see the number of principal, or the amount of principal that you've paid down in the 5-year period as well. You also get to see your APR, which again is not the same as your interest rate. That takes into account every other cost of the loan. So if you have mortgage insurance and then any closing costs, that takes into account. So don't be surprised if that's a little bit higher than your interest rate. That is also normal, but you'll see that right here. And then you have your total interest paid on the loan, which is the number that nobody wants to look at. Just skip by it. It's going to be high. Just ignore it. And then after that, you just have other considerations. So you have your appraisal, any assumptions, homeowners insurance, if there's a late payment, how that's kind of broken up. So if it's after 15 days, if you don't pay after 30 days, they'll kind of go over the exact penalty for that. You have the option to refinance on the loan, and then the servicing. Okay, that I feel like is probably the biggest part, honestly, of page 3. You get to see who you're actually paying every single month. So for instance, at Premier Mortgage Lending, we use United Wholesale Mortgage for a lot of our loans. They service their own loan. So when you get a mortgage through us, you pay United Wholesale Mortgage every single month. That will be noted down here. As you see here, it says, we intend to transfer service of your loan. Okay, don't freak out. All that means is that you'll be paying a separate either bank or lender who is servicing your loan every single month. And that's really it, guys. That's the full extent to the loan estimate. Again, that's in the first set of disclosures that you get. After you sign this, that's when your loan goes into underwriting. And I think it's really important to note too that this is non-binding. So just because you sign this doesn't mean you're stuck using the lender that you signed it with. I don't want to say don't get too caught up in what's in like the exact numbers that are in it, because if you're comparing 2 lenders, okay, you can still sign technically with both lenders and then see what the exact numbers to close will be later on and then make your comparison. Okay, I wouldn't really recommend that, but again, it's open to you. It's a non-binding agreement. You can always back out afterwards. Okay. Again, my name is Matthew McDonald with Premier Mortgage Lending. I hope you guys learned a little something about the first set, or the loan estimate, which is in your first set of disclosures. And I can't wait to see you guys in the next video.